It is Josh Brown's best stocks in the market time. You added a new name. What is it?
That's right, Scott. Today we're going to talk about Dominion Energy. Ticker symbol is D. If I ask most people what they think is the most important geographic location on Earth for the modern internet, they'd probably say Silicon Valley. Some might say somewhere in Asia. They would be wrong. It's Loudoun County, Virginia. 70% of the entire world's internet traffic passes through that area, and Dominion is the electric utility that is responsible for the bulk of what needs to happen in order for that 70% of global internet traffic to come alive. Story here is very simple. When the consumer internet was born, this is where AOL was based, and from there Yahoo and ultimately Google. Amazon invested $52 billion between 2011 and 2021 right in this area of the country. They've just committed to spending another $35 billion between now and 2040. Amazon's putting up another 42 million square feet of data center space in the region. So Dominion is the company supplying the bulk of the electricity needed. They just said that of their top 10 all-time peak electricity demand days in the state of Virginia, 9 of those 10 have occurred this year. So that's what's happening with the company. You look at the stock price. What makes this a best stock is when they reported earnings last week, they affirmed their dividend for the year, their earnings outlook for the year, and their creditworthiness. And you know, this is sort of, I don't want to call it defensive, but it is a utility. But you've got a stock, give me like a one-year chart, guys. You've got a stock now about to break out above historical resistance at about 60, 61, happening as we speak. You've got that moving average crossover that you know I just live for. I'm obsessed with this golden cross that we're showing you here, the 50 above the 200. And there's a rate case that we should get results from in September. That's the next catalyst. They have submitted to their regulators the case for why they should be able to increase rates, obviously serving all these data centers. If they get it, if the regulators say, yes, here's your new rates that you can charge, that's the catalyst that I think takes the stock higher. From a risk management standpoint, I would use 50 as a trader. That would be my pivot point. Breaks below that level, something must have changed, and we'll find out eventually. So long as she stays above, I like it here.
What's interesting,
4.5% yield, PS. 4.5% yield.
What's also interesting to me is trying to, and it sounds like you're trying to as well, everybody kind of is, wrap your arms around a new way of viewing these types of stocks. What was a historically and classically defensive type thing of utilities is now like a new growth stock. It is.
It's a new oil
you know,
portfolio.
It's crazy, but they're look. You've got the bulk of the people who have owned this stock for the last 10 years own it because it's a regulated utility. It's one of the top payers in it's one of the top payers in the S&P 500 dividend-wise, and that's the traditional shareholder base. And over the last year, that's changed because people are recognizing there is no AI without electricity. And the demand goes higher, the rates that can be charged go higher. And it's not just rates, it's this entire build out that only a small handful of companies are capable of managing and executing. And this is one of those.
What do you think about this space?
I think, Josh, and the conversation here is spot on, which is this is a new growth stock. I mean, you look at utilities, for example, they're up just 8% since the beginning of June. And I think it's the realization that hyperscaler CapEx is actually once again reaccelerating, surprising to the upside, which means more data centers and also more energy needs. And speaking of energy needs, the reason why I think investors are waking up to this being a growth story, Scott, is because we have not seen a lot in terms of power generation growth and really demand for electricity growth until just a couple of years ago. So I think this is a secular trend and sticking with it. You just added Atmos, which is a new utility buy in the ETF.
Really love that we added this to the portfolio. This is a stock that technically looks phenomenal. Look what it's done over the last 5 years. It's up nearly 50%. It has been really strong recently, and it is the solution as it relates to power generation data center demand. Natural gas is going to fill that void. These utility companies are the new oil.